So, Taylor, we've covered situations like filing for a deceased relative, which can be emotionally and administratively complex. But there's another unique situation we should discuss, one that affects a growing number of people: U.S. citizens living abroad. Imagine you're an American who's packed their bags, embraced a new culture, and built a life in another country. You might be wondering, do I still need to worry about U.S. taxes? The short answer is maybe. It's a little more complicated than that. Let's dive into this with Sam. Sam, how does living abroad impact U.S. tax obligations?
Thanks, Alex. It's a common misconception that simply living outside the U.S. exempts you from filing. The U.S. taxes its citizens on worldwide income, regardless of where they reside.
Whoa, really? So even if I'm earning and paying taxes in, say, France, I still have to file in the US? That seems double the trouble.
It can feel that way, which is why there are provisions to mitigate double taxation. But the core principle remains: U.S. citizens have a filing obligation even abroad.
Exactly, Taylor. Think of it like this: your U.S. citizenship maintains a connection to the tax system, regardless of your physical location. Sam, you mentioned provisions against double taxation. Can you elaborate on those? Are there any exclusions or special provisions available?
Absolutely. One of the most significant is the foreign earned income exclusion. This allows you to exclude a certain amount of your foreign earned income from U.S. taxation. For 2024, that amount is over $120,000. There's also the foreign tax credit, which allows you to credit the foreign taxes you paid against your U.S. tax liability.
So if I understand correctly, even if I have to file, I might not actually owe anything to the US if my income falls below a certain threshold or if I've already paid taxes in another country.
Precisely. These provisions aim to prevent you from being taxed twice on the same income. Let's take a simple example. Imagine you earned $90,000 working in the UK and paid taxes there. Using the foreign earned income exclusion, you likely wouldn't owe anything to the US, but you'd still need to file a return to claim the exclusion.
That's a crucial point, Taylor. Filing is distinct from owing. It's like registering your car. Even if you don't drive it much, you still have to register it.
This reminds me of what we discussed earlier about filing even if you're below the income threshold in the US to claim withheld taxes. It's a similar principle here, just on an international scale.
A great connection, Taylor. And to add another layer of complexity, these exclusions and credits have specific requirements and limitations. For instance, the foreign earned income exclusion has a physical presence test, meaning you must have lived in the foreign country for a certain period.
Right? It's not as simple as just saying you live abroad. There are tests and documentation involved. This is where IRS Publication 54 becomes invaluable. So to recap, U.S. citizens living abroad generally still have a filing requirement, while the foreign earned income exclusion and the foreign tax credit can offer significant relief from double taxation. The rules can be intricate. This is definitely a situation where professional advice is highly recommended. Taylor, any final thoughts?
I think the biggest takeaway for me is that living abroad doesn't automatically mean you're off the hook for U.S. taxes. It's crucial to consult IRS Publication 54 and probably talk to a tax professional specializing in international taxation to understand your specific obligations.
Excellent advice. For our listeners, make sure to check out IRS Publication 54 for in-depth information on this topic. And as Taylor mentioned, consulting a qualified tax professional is highly recommended.